Good evening, you're watching CNBC Africa and this is your week's edition of Invest Africa. I'm Alicia Seckham. Africa's healthcare sector makes a compelling case for investment and according to the Economist Intelligence Unit, Sub-Saharan Africa healthcare market is poised to reach $35 billion by 2016. But one of the contentious issues around healthcare in Africa is costs. Pilani Nyalunga brings us more.
According to media reports, by 2021, more people will die from non-communicable diseases in Africa than anywhere else in the world, and a major hindrance for the eradication of these problems is the high cost of healthcare. Tax and advisory firm KPMG's findings were that the healthcare industry is underperforming when compared to that of the rest of the world.
There is a significant increase generally in terms of non-communicable diseases, as an example. And that what we're seeing is that by 2030, we see reports that non-communicable diseases will overtake things like HIV and malaria. And therefore, there needs to be focus on this from the various healthcare systems.
According to the World Bank, Sub-Saharan Africa has about 11% of the world's population, but it carries 24% of the global disease burden in human and financial costs.
Well, there's a dire need for improved. Leaders are challenged. Wherever you look at any leader in the continent, particularly in Africa, is challenged with having to improve healthcare in their various regions. And I think we have an advantage in the sense that as an emerging continent, we really can leverage technology. Yeah? We can take technology to a different level to complement healthcare and management of health. In especially, the rural areas and amongst the destitute.
Private-public partnerships are needed to address the glaring challenges that inherently come with the healthcare industry in Africa.
I think that there is a role to play for that, especially, we've heard a lot about national health insurance. That will bring about a lot of public-private partnership, hopefully. And whereas it might be from healthcare providers right through until to the medicine utilization, where volumes are increasing, once again getting economies of scale, and I think that will help in general.
Due to the continent's substantial economic growth, the healthcare industry in Africa shows a positive outlook. However, due to increasing healthcare costs, it has become a major challenge for those who cannot afford to attain private care. For the healthcare industry to reach its full potential, it must reduce its costs. Pilani Nyalunga, CNBC Africa, Johannesburg.
Well, joining me at the desk to break down Africa's healthcare sector is Stavros Nicolaou. He's Senior Executive of Strategic Trade at Aspen. Next to him, Sven, KPMG Head of Healthcare Africa. And joining us from our Nairobi bureau is Shakir Merali. He's partner at the Abraaj Group. We welcome all of you this afternoon. So let's get straight into a look at the investment case the healthcare sector is putting on the table right now. We had the insert there alluding to some of the standout points in your books, Sven. Where do we stand in that regard?
Yep, a very clear number, 40 billion by 2016 is what the continent needs in terms of new investment. Most of that, incidentally, will be private sector investment. Reflects, I think, both the optimism of Africa alongside of what is really a fantastic potential around health and life sciences on the continent. Mm-hmm. That's driven by three broad things. The first is a desire on behalf of governments to dramatically increase their life expectancy. They need to do that because clearly for every dollar that they spend on their citizenry, they'll get it back fivefold. In fact, for each and every year that a government increases its life expectancy, it will deliver 4% GDP in the long run. So that's a real, investing in health is both a social case, but it's also an economic case.
Yeah, looking at that economic case, it's something that Aspen has very aptly been able to leverage off. So let's take a look at the kind of investment you're making into the healthcare space on the continent at large.
So I think firstly, let me say I share the optimism of Sven, and I think that optimism has been consistent with Aspen's approach to the African continent, and that approach has been to look at various forms of distribution either through ownership of on-the-ground manufacturing and distribution platforms, such as, for example, Aspen acquired a business called Shelley's, which is the largest East African player at the time, largest East African pharmaceutical player. So we initially acquired 60% of Shelley's, later on acquired the full 100%. That's been a very successful acquisition for us. It's allowed us to re-engineer that business, tailor it more to the conditions required in East Africa, and also to service as an export platform some of the neighboring territories in East Africa, such as Rwanda, Burundi, etc. Also, more recently, we've made on-the-ground investments in Nigeria, Ghana, which is where a lot of the optimism is flowing from, West Africa. And I think poignantly, we saw an opportunity around partnerships about 5 years ago. You'll be aware of the multiple transactions Aspen and GSK have embarked on over the last 5 years. In fact, prior to that, one of those is a joint collaboration into the Sub-Saharan continent, where GSK and Aspen put together their collective strengths, leveraged off those strengths, and went into the market. And that market presence initially, incidentally, the initiative is called GSK Aspen for Africa. That initiative has realized around 400 salespeople on the ground in Sub-Saharan Africa, excluding South Africa. Of course, I exclude South Africa, Botswana, and Namibia from that. So I think we're heavily invested on the continent. We're showing good growth on the continent, and share the optimism of Sven.
A lot of the companies that we have seen operate doing it with partners on the ground acquisitively as well. Is that the route to go if you're to succeed in this space, or is it just easier as opposed to going greenfields?
Well, yes, and this is a huge pivot point for firms in South Africa, of course, because they'll want to partner with others across the continent. So let's just take an example about, there's one thing about getting drugs out to market, it's quite another about actually trucking them down the street. So great South African company, RTT, now called Imperial, is really pushing its way throughout the continent, and it is doing so by purchasing up other supply chain businesses and locking arms with other firms, and essentially beginning to think through what a more developed supply chain looks like. And that's incredibly important as you stuff more material down that supply chain, whether it be cold chain. It's particularly important in health and pharma, but also much broader elements across the economy. So partnership's a big part of that. The flip side, though, is that there isn't an awful lot to buy. Once you've kind of gone through one or two of everything in every market, some of which in some industries is predominantly family owned, there isn't much left. So, there might be one or two very sophisticated East African-based logistics companies, but there certainly aren't 6. And it's highly likely that the 1 or 2 or 3 that are active and have the reach that a business is looking for already have some type of joint venture in place. So what we need today is greenfield capital. It's new venture capital. It's essentially new capacity in the marketplace. Because for firms such as Abraaj, but also firms that want to expand their footprint, there isn't always much left to buy.
So let's bring in Shakir at this point, because as a private equity player, you focus on a buy and build strategy and believe in investing in businesses that would, at the end of the day, maximize shareholder value through strong operational growth and substantial capital appreciation as well. What's your assessment of the opportunity that you actually have right now? Is it scarce?
Not at all. In fact, the transaction where Aspen acquired Shelley's, Shelley's was actually an investment of ours, and we were the institution that actually introduced Aspen to the business. So Stephen Saad knows me pretty well. And I think that transaction actually reflects our philosophy on what the opportunities are around Sub-Saharan Africa. We're of the view that it's vital to be on the ground itself when you're looking at making investments on the continent. It allows you to determine who the right partners are. It allows you to be able to work with them effectively. And that's essentially our thesis for investment in the sector. Not just healthcare, but pretty much everything else that we do. When you're able to do that and do that effectively, you're able to create institutions of scale. and then these are institutions that themselves become of interest to other businesses that are now looking at venturing or embarking onto the continent. And so the Shelley's example is a great one.
Yeah. In your books, Stavros, just how rife are the opportunities? Are you having to explore the greenfield route a little bit more so right now?
So look, I think opportunities, acquisitive opportunities, they do abound. The issue though is getting the correct acquisitive target, and I think that's where possibly Sven's coming from. So getting the right fits on the continent is probably more challenging than if you were looking at more mature markets, I guess. So I think that's what we're finding. But certainly those opportunities do present, as they did with Shelley's. You know, in other markets where you don't quite find the right acquisitive target, then you're going to go and make your own investments. So you're going to go through market by market and look at what works best for your business. You know, sometimes an acquisition target is best, and other occasions you might decide, well, there's nothing there that really applies the operational synergies we're looking for. So let's put our own investment in and start from scratch.
It does become a lot harder to do those, Sven, in a fiercely competitive industry. I mean, Aspen, you've highlighted, has been pretty acquisitive. We've seen over the past few months as well attention on a company like Adcock Ingram and what it's been receiving. Your assessment of that competitive landscape, because where opportunity, as you say, is lacking, it makes it all the more challenging in that context.
Yeah, sure. So Abraaj is a very good example because they're doing the right things. They're essentially taking bits and pieces of different markets, or essentially in many cases the same market, or same industry, but across different markets, and they're beginning to put together regional pieces. And that becomes then very attractive to organizations who want essentially a regional market or a regional platform. Because they're essentially into putting together the right pieces and then being able to find a good buyer for them and make a good return. So they're essentially doing the hard work that some businesses themselves might do, but in other cases actually think that's too terribly difficult or a bit risky, and so we'll let someone else do it. We'll let someone else work out that strategy, and then we'll come in and we'll pay for that. So there's different views about how you do that. And what that does, of course, is there's no shortage of money coming into Africa today. I mean, I refer to it as walls of money around the continent. And so there's lots of competition for putting those elements together. And I think the challenge becomes as a business is, do you have the right fit? And what's the alternatives? And the alternatives are you have to either take smaller subscale businesses that typically you might not invest in, begin to invest in those and do it yourself and grow them because they're not quite at the size you want. But the alternative is to is greenfield, or the alternative is to make that investment yourself.
Exactly, and what that does for you, Shakir, is give you enough opportunity when it comes to exit mechanisms that are available to you at the end of the day, with so many investors foreign on the continent itself looking at buying into the space a little bit more aggressively. But at the coalface of it, just how much hard work is it getting those businesses to a point that makes it sellable at the end of the day?
That's a very good question, and one needs to start by looking at the healthcare market at a macro level. Today, based on recent work that's been done by McKinsey, the expected investment opportunities in healthcare, around 70% or so is going to be in healthcare services delivery and diagnostics, with the rest of it in pharma distribution, manufacturing, and other affiliated manufacturing and business services. So that's where the big gap is. Historically, there's been substantial underinvestment. The development of a private sector in this space is relatively recent in a number of markets, which means that most of the businesses are actually very small and subscale. Also, when you look at the people who are actually consuming healthcare services and segment them by the economic tiers, the people at the top of the economic tier can get the services they need or fly out of the continent to get them wherever they need to. But the majority of people actually can't do that. And so you've got this gap which the private sector has started to try and fill, where historical underinvestment by the government hasn't actually served its purpose. And it's resulted in a vast number of very small subscale businesses with differing degrees of professionalism. And that's really the big opportunity for us, because we're able to come in with our experience of investing in healthcare. As a group, we've invested over $1 billion in healthcare across global growth markets worldwide, and try and leverage our knowledge, understanding, stitch some of these things together, build up the capacity, capability, leverage the relationships we have in other more developed markets like India and so on, to increase the quality while maintaining the accessibility. And then suddenly you've got yourself a footprint and an infrastructure that itself is very difficult to build.
Sven, we're about to go into a break, but quick comment from you on that.
Yeah, I mean, the big opportunity across the continent is high quality and lower cost healthcare. So what we're really looking for is these new chains to be delivered. So essentially, think about the large chains you have in South Africa. What we need is these new chains that you see in India and in China that come up across the continent and are focused on that. So we're having a major international conference in 2 weeks, in fact, in Johannesburg, and it's all about how do you deliver and create these chains that have been created in other markets where we've done that with our clients, and do that in Africa. Because interestingly, there's been a real lag in that. So on the high-end piece, absolutely quite right. People can fly in and out, so you have some tourism happening. Or, of course, there are some who will stay local, and there'll be limited number of services that will be available to them, but they will be costly. And so what they need to do is think much more about how do we go lower into the pyramid, and by doing that, providing more access.